Happy Sunday, guys, and welcome to another episode of Full Transparency Trading, where, of course, I am your host, Sebastian, and we're going to get into a quick market analysis of what could possibly happen next week. Before we get started, take everything that I say here with a grain of salt, because we don't have any actual good data leading into Monday. We finished the week off at a pretty high, but we did finish off at a lower high. We're going to go ahead and get into the charts here. This is my vision board. We're going to go ahead and get into the charts. As you guys can see, we go to the 4-hour time frame and then switch over to the 1-hour time frame to make it a little bit smaller. Let's just highlight this area here. This is the 2 weeks, the last 2 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and 14 days. And over the last 2 weeks, we started off at a low of 561 to 560.80. We pushed up and up and up. We wicked it out initially, the high, ran it up to 568, and then the floor became this 565 area to 566. And that's why this is my demand zone. So you can see my demand zone set up here. You can see it holding. Yes, we did wick it out on Friday afternoon or whatever day this was, but it held the entire rest of the time, right? But let's get to the current week. So the current week, let's say Thursday of last week, Friday of last week, we were at the high. We hit 575. Let's take it to this time. So we ended up hitting 575 and rejecting. We rejected strongly on that Friday, taking us down to 569. Okay, we stayed in this range, the top half of the range, pretty much the entire beginning of the week. And then on Tuesday we had a very strong fall. So Tuesday we had 573, which 573 over here on Friday was also a holding level. Tuesday we hit it here. We fell down to our demand zone, which is 566. We wicked into the demand zone about halfway, and then we went back up to about 570. So 570 became was support, became resistance for a little bit. We stayed below resistance, stayed below resistance, stayed below resistance. On Friday, we finally decided to push the market back up in the pre-market. So after hours, we consolidated towards the high. We finally broke the high at 8:30. We shoot all the way up here to 573. We open the day at 573, and then we reject down from that point on at 9:30, right? Then finally at about 10:30, we finally reached the 568, and 568 was the area that I chose as my strike price, knowing that we are around the high. How I knew that? Let's go over here to the 1 day 5 minute. Well, in the pre-market on futures, I took this trade right here at 8:30. I took the trade from the support level, and it wicked all the way up. Then it started to come down. As it started to come down, I got out. So on ES, this looks a little different, but it's pretty much the exact same thing, right? Okay, then the market started to climb back up, because what do I tell you guys about these wicks? The body of a candle is going to find these large wicks eventually. So we're going up, 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 up. Hit 573 is the high, rejected from that point there. You know my thing, equal highs, let's ride. Could have rode it down from there, and in the pre-market I did on the futures, but then it came to what's going to happen in options. So I waited out the first 5 minute candle. I am a 9:30 trader. I don't mind trading at 9:30 at all. I'm actually quite decent at it. I waited out the 9:30 candle. Why? For two reasons. When the market first shifts in for options, the prices have not adjusted. So you could be getting prices from Friday, and if it doesn't go your way, it could cost you a lot of money. I started the account with $1,000 on Friday of the week prior, right? It finally cleared on this Friday, so that was the first time I was able to take my trade. I made $100. The reason that it says $94.56 is because there is a fee. We'll get into that fee in a moment. So let's go over here to monitor when you want to look at your wins and losses. And as you guys can see, I am still on this account, because remember, I went over to futures before I got to break even on my account. So I'm still down $1,882. That is $73 negative on SPY. As you guys can see, I'm only $73 away from being positive on SPY. I am $90 away from being positive on this particular SPX, but overall I'm $895 away from being positive on SPX. I'm $1148 from being positive on QQQ, but all we need to do is make $1,800 over the course of the next several weeks to finally be at a positive statement on my options account. And then I can feel like I finally accomplished the goal, which was being a good trader overall. And I already feel like a good trader. I was very happy to see that my technique of trading actually worked out very well on Friday, and we went straight to my strike price. But let's show you how I get into my trades. Click on trade and go to our product. Now, really quickly, yes, I do know how to use ActiveTrader. I personally absolutely hate Active Trader, so I won't use it. I like to use our products, and I'll show you how I use our products. You see that 567 is 40 cents. There are several areas that I'll buy into a stock, right? Usually I won't go any less than 38 to 40 cents. If I'm buying it at 40 cents, I'll buy 5 contracts, i.e. $200 investment of my $1,000. If I'm buying it at 50 cents, I'll buy 3 contracts, a $150 investment of my $1,000. If I'm buying in at 60 to 70 cents, I'll buy in 2 contracts, so $120 to $130 of my investment. Why less as it costs more? Well, the more it costs and the closer you are to the actual money, the more you're going to get anyway. So I look at it like that. Like, you need more of these to build your delta up. My delta is right here over on the sell side. My delta is here on the buy side, right? Notice that the delta for the 40 cents is 15 cents. The delta for the 80 cents is 29 cents. Once I get 2 of these, I already have a better delta. I'm already getting more money than I would if I bought more of these. So that is a tip that I can give you, is if you can only afford 1 contract right next to the money, dip back a couple of spaces until you can afford 2-3 contracts for the same price and buy those. It'll give you a higher delta. Like, just 2 contracts right here will put us pretty much in the money's contract. So as we're getting to the money, we're also going to be gaining delta. So we're going to go to 29 cents, then 37 cents, then 46 cents. So as you're growing with those 4 contracts versus this 1 contract, going to 57 cents or 70 cents or even $1 once you're $4 up, you're going to get so much more by having a multiplicative amount of contracts added to the amount that you're already getting. You're already getting the 50 cents or whatever per move that you're going up, plus your delta, which is actually going to be around $1 for 4 contracts, or 80 cents for 4 contracts, $1 if you're getting this one right here. And then the same thing goes for on the call side. You know, you'll notice that calls are cheaper, and that's because we're already at a premium right now. Since we're sitting in the premium, the calls are going to be cheaper to get into, but which means they're going to grow less. Now, if you want to buy a contract, you want to click as close to this money as possible. And I'm going to start with the sell side of things because it's more important. Well, I'll go ahead and show you. If you click buy, you'll automatically come up with your presets and buy, right? But if you're going to buy a put, you need to switch from sell on the side here to buy. Again, click side, switch from sell to buy. If you sell the put, you're going to start out of negative money because you're selling a spread, right? You don't want to do that. You want to buy the put and buy the call like natural. That's the way that we normally trade. Now, if you want to buy and you want to sell calls and sell puts, I got no problem with that. Just realize that you're going to need a little bit more capital and that the risk is going to be a little higher, but the benefits are also higher, right? So remember that. Now let's go back over to the active trader and look at the screen. So we get in right here at the high, we put up to, it was resistance, it became support, we got up to it, we got in immediately at 572.74, started taking to the downside, immediately seeing positive $12, positive $55, positive $75. When we got to positive 100, we closed out. Why did I close early? Not just because I was scalping like natural, but I wanted to start my very first trade out positive. I didn't want to risk the chance of it reversing to the upside and me losing that profit. I also wanted to secure 10% of my starting balance. That is the goal for the day. It's not the 250 that I normally start with. When you're first starting out, it should be 10% of your starting balance. If you're starting out with 250, you're trying to make $25. If you're starting out with 500, you're trying to make $50. So I'm starting with $1,000. I'm trying to make $100. I made my $100. Now you might be asking, Sebastian, why is it 94.56? Well, that is because there are fees to close your trades. So the fee was $5.44. Knowing that now, I now know that I need my next trade to be $112 or $105 respectively to make sure that I get the $100. Obviously, now that I know that my system works, I will hold my trades a little longer for options than I do for futures because I want to make sure that I'm maximizing my profits on the days when I'm correct. When I'm wrong, of course, my stop loss will stop me out and protect me. But when I'm correct, I want my trades to run longer. I'm also going to start running my trailing stop so that it'll just trail the play for me and I don't have to worry about getting out. And what I'll do is I'll just activate my trailing stop about 15 minutes into the trade once we're in this area here. This is 5, 10, 15. We're still going down. And from that point on, we broke out and we went all the way down to my strike price. Let's go look at what the strike price would have been worth. Okay, I was 4 out of the money. I bought it at 40 cents. Getting to the money, which is $5, would have been $134. So you're buying 5 contracts at 30 cents. This is 5 contracts at $100 each, so $500. But guess what? Since we went from 40 cents right here, I'm going to show you. Go over to the calculator, show you how the math works. We're not going to include the, what is this thing? We're not going to include the, you want to type? The delta. So just know that you're going to be making more money with the delta as well. We're just going to do the math. 134 minus 40 equals 94 cents. So we'd have made $940. We would have made $940 profit before our delta even kicked in, just holding our trade until 10:30. Okay, and that's before adding the delta. So the delta is going to have this even higher. This would have been over $1,000 trade, just holding from 9:35 until 10:30. But like I said, I wanted to end the day positive. I don't really hang on the money that I could have had anymore, because now I know my system works. I know I can keep adding money to my account, and eventually I'm going to hit that $1,000 day doing the exact same thing that I did on Friday. Okay, after we hit the low, we went ahead and we ran back to the high. But notice, it's always easier to fall than it is to climb. The climb was steep and slow, and it was back and forth all day long until we finally ended at the high. But look, we actually rejected right back to where? Our previous resistance level. So we wicked it out. There will be bodies of the candle looking to take over this. Let me see if they did it in the after hours. They did not in the after hours. So there will be a body of a candle eventually looking to overtake this. But we could be starting out Monday in a deficit or going down. I don't know if the little interest rate move was enough to get us to a higher point or to get us back to that 575. I have been bearish about the market all week long, and my original interpretation was correct. But like I said, I don't carry my bias into my trades. I trade what I see. So when it's going up, I'm trading the trend going up. When it's going down, I'm trading the trend going down. So no matter what, I'm going to trade that trend, even though I feel like the market should be bearish. Okay, but that is it for today, guys. Like I said, we could open up Monday in a deficit. We'll find out today at 6 o'clock when the futures market opens, which I feel will just shoot up a little bit and then start to fall. But we'll find out in the futures market what's going to happen, and we'll take it from there. You guys have a great day. Happy Sunday. Happy hunting if you trade today. Enjoy some football games. Get some food. Spend some time with the family. And I'll see you guys in the next video. As always, you know the motto. Take the easy money, guys. That taking $100 was the easy money. All I'm trying to do right now is build my account up and start digging into this. This was $1,982. I want to start digging into this deficit that I have here, and I want this to be positive by the end of the month. I want to come back here at the end of the month and show you guys that, hey, we are at positive $100, $200, whatever the case is, by the end of this month. I want to erase all of these losses that I had in 2023 and the beginning of 2024 before I started trading futures. And that is my goal for my options account, obviously to make as much as possible, but we want to just keep it going, just keep chipping away at it every single week, reducing the amount of losses that you have and increasing the amount of gains that you have. But that's it for me. Thanks. This has been another Full Transparency Trading Session. As always, I'm your host, Sebastian, and I'm out.